Morning. This is Market Movers for Thursday, December 5th, 2013. Not a whole lot of activity. We opened out about 60 points on the Dow. We're down about half that or so right now. Pretty quiet day. Not too much information. We had weekly jobless claims down about 23,000 last week. Yesterday we had the ADP number for employment for last month. 215,000 jobs added, quite a bit better than expected. I think they were looking for about 170. But the government number comes out tomorrow. It should be a lot more important to the markets. Also, GDP for the third quarter revised from 3% up to 3.6%. Best growth rate for a quarter since 2012, looking back to last year. So good data for the most part, but as we've been talking about quite a bit lately, good numbers can be bad numbers as far as the Fed goes, because the stronger the economy looks, the more likely they are to start tapering. And of course, we have the Fed meeting coming up on the 17th and 18th, where we probably won't get a decision on tapering to begin now, but we might get an indication that they are considering starting tapering earlier than March, and that probably will hit the markets a little bit. As far as the markets go, the Dow and the S&P 500 both cracked below major support levels, or big round numbers if you will, 16,000 on the Dow and 1,800 on the S&P 500. The NASDAQ remains above 4,000, at least for the moment, but we are down a little bit again today, so we'll have to see how things go, especially tomorrow. Again, if that government employment number is well, it's hard to say. If it's a really good number, the market might be down because they think that means the Fed's more likely to taper. If it's a bad number, then it means the economy's faltering, and that might send the markets down anyway. If you look at the markets and you see a negative reaction, whether the news is good or bad, it usually indicates the market's pretty expensive, and that's how I feel about it. Good news and bad news can all be bad, considering where we are in terms of valuations. Pretty expensive. 19 times earnings on the S&P 500. It's not a giant number, but it's, considering growth rates for earnings in the future, I think that's a pretty big number. And it's going to be difficult for the market to go much higher from where it is right now, but we'll wait and see. Thanks for listening.